Are you trying to buy a home and you're wondering, why can't I get pre-approved? Like, what is going on? Let's talk about the 5 main reasons it's difficult for people to get pre-approved. Number one, which will always be the biggest factor, unfortunately, is credit. While we don't have to look at a specific credit score necessarily, we're always looking at your credit profile. So, are you making on time payments? How long have you had credit open? Do you have any collections? So, I would say, number one thing, if you're trying to get your credit where it needs to be, put your payments on auto pay. Put your credit card, put your car payment, whatever it is that can go on auto pay, put it on auto pay. As sad as it is to say, it's better to overdraft your bank account than to have a late payment post on your credit. So focus number one on time payments, and then focus number two on paying down debt, what we call utilization on credit cards. So credit card companies, when it comes to how they're reporting and helping your score, they are looking to see that you have credit available and are not trying to max it out. So your goal is always to use around 30% or less of a balance versus what you have available on a card. So I tell everyone, for us, we're looking at the payments when it comes to credit and what you have open. So if you're thinking about paying down cards to get that utilization down, I would say start with your ones that have the highest payment, because that's going to give you a boost on your credit and also help one of the later things we're going to talk about. Number two is a tough one: income. We are seeing housing prices rise and rise and rise. Like here in Charleston, our average purchase price is almost $450,000. Incomes are not rising to match. And there's not a lot we can do about that. Like as a lender, I can't tell you, oh, go get a better job, go work 4 jobs. It doesn't work like that, right? So we have to look at alternate things. Can we look at programs with lower interest rates to help you qualify for more? Do we need to put a bigger down payment down? Or what's becoming more and more common, do you have anyone who can be a co-borrower? While we understand mom, dad, grandma may not be giving you money, maybe they could be a co-borrower to help with your loan. Although I warn everyone, adding their income doesn't make your income go any further. So we also have to be able to still live within our means. But income can definitely be a tough one if you don't make enough income to qualify. Or we have a lot of people that were W-2 and they switched to 1099. And when you switch to 1099, you're going to have at least a year, if not 2 years of a waiting period, because you're going from guaranteed income to whatever business you're trying to run. So those always have a waiting period. Number three is assets, money you have in checking, savings, 401k, or a gift fund that you're going to be receiving from someone. While there are 100% financing loans like VA and USDA that don't have a down payment, and there are down payment assistance programs for almost every state, there is no such thing as a zero out-of-pocket loan. You still have closing costs. You still have lender fees, attorney fees, taxes that you pay at closing, HOA fees potentially. And yes, a lot of times you can get the seller to cover a good portion of those, but you will always be out of pocket for costs. You have your earnest money that you have to put down to be able to even put in an offer. That is typically around 1%. Doesn't always have to be, but on average, it's about 1% of the purchase price that you need to be able to put down. You have your appraisal, which is on average around $600, and then you have your inspection, which could be another $400 to $500. So again, you will have to have money saved. Even if you don't have your down payment saved, you cannot close on a loan with $5 in your bank account. You have to be prepared and save. If you can save for your down payment, that's amazing. Again, if not, we'll look at down payment assistance programs, but money still needs to be there. You can also get a gift fund from a family member that can help cover some of your costs as well. The fourth reason you may be having difficulty getting pre-approved is your debt to income ratio. So we as lenders always have to look at your income versus what is reporting to credit. So you got 2 different debt to income ratios. You got your housing expense ratio, which is just your income versus the new mortgage. Then you have your back end debt to income ratio, which is what most of us are talking about, which is the mortgage plus any debts that are reporting to credit. So car payments, credit cards, collections, student loans. Now, most of the time your electricity bills aren't reporting to credit, or like your gas bill or anything like that. It's only what reports to credit. But those are what we have to use to calculate to see how much you can actually afford in that mortgage. And each loan program has its own criteria that we have to use. So again, I tell everyone, like I talked about earlier, if you're looking at paying down debt, start with your ones with the highest payments, because that's what we're looking at. We're not looking at your total balance. That's what credit's looking at. We are looking at what the payment is. So if you have a credit card with $500 on it with a $100 payment, and you have a credit card with $5,000 on it with a $50 payment, we are actually going to have to try to get you to pay off that $100 a month payment one. So focus. I know there's a lot of theories out there of which ones to pay down. If you're trying to buy a house, focus on your cards that have the highest payments and getting those balances down. The fifth reason you may be having difficulty getting pre-approved may surprise you, and it could be the lender you're choosing. Yes, us. So each lender has different programs. Each lender has a different level of experience, years of experience, and each lender knows their guidelines, little or more. So when it comes to choosing your lender, I highly suggest you ask your realtor first. Who do they recommend? Because realtors will specifically have referral partners in the lending world that they've worked with and they know do a good job. You can use an online lender. It's always up to you what lender you want to use, but keep in mind, they don't care. They don't care if you close. They've got 50 more of you filling out their apps right behind you. And it's usually a computer. So no one's really checking over it as much. So you do have a higher risk with that pre-approval, or you have a higher risk of being denied because something doesn't look right on the pay stubs and the computer can't figure it out. So working with an actual human will make sure that your pre-approval is valid, and that human is going to want to work your file a lot more. And working with a local lender like myself here in Charleston or in North Carolina, we are there to really try to work that file. I will work a file like a Rubik's Cube until I find a way to get you pre-approved or find your plan for you to be pre-approved within the year. So sometimes if you're working with the wrong lender, you may not be pre-approved. That does not mean that you can't be pre-approved anywhere else. Each lender also may have a minimum credit threshold or DTI threshold that we have to follow for our specific company and investors. So if one tells you no, that's okay. You can try again with another lender, and you may have to try 2 or 3 depending on if you're looking for a really specific loan program, like a doctor lawyer loan or something. So it could also be the lender is the reason you're not getting pre-approved. But no matter your situation, we are here. We want to get you pre-approved. We want to get you into homes. We want you to be a homeowner. So it's our job to help you make that happen. If you have any questions and you want to talk about your specific scenario, feel free to send me a message.